Hello and welcome to CIA News, tomorrow's crypto news today. In our first article, we see that over 40 central banks are considering blockchain applications, according to a Davos report. Published Wednesday, the report analyzes how different central banks are either examining what blockchain can be used for or are outright experimenting with central bank digital currencies. It's very much the case that several central banks are looking at this, said Ashley Landquist, a project lead in blockchain and distributed ledger technology at the World Economic Forum and the primary author of the report. She counted at least 44 different central banks that are exploring, researching, or actively experimenting with blockchain technology, with an eye to potentially issue a digital currency in the eventual future. At present, these banks have to navigate a host of technical and policy issues, she said. On the technical side, the institutions need to ensure that their new systems work as intended and whether they are preserving data privacy accurately. Other questions pertain to the policy aspects, including a central bank's monetary policy. These issues need to be studied to avoid any unintended consequences, she said. Those caveats aside, present trends bode well for central bank digital currency, she said. I'd say in the next couple of years, speculating towards the future and being a bit conservative, I would expect a couple central banks to issue a central bank digital currency, and that's because we know that at least a few are. The National Bank of Cambodia, for example, plans to incorporate blockchain technology for its national payment system by the end of this year. Not a lot of central banks were aware of Cambodia's work, Landquist said. The purpose of the white paper was to share this information as well as what efforts other central banks are working on. Another example came from France. The Bank of France has actually been using Ethereum with smart contracts and a private Ethereum implementation, Landquist said. It's one of the first production deployments of Ethereum in the world, and it was by a central bank. Surprise, surprise, right? The banks are saying one thing and then doing another thing, banning their customers from buying crypto with credit or even with their accounts, and then going and experimenting and investing in research and development. And some banks even getting ready to roll out central bank digital currency service to their people. The Bank of France has replaced its process for provisioning and sharing single euro payments area credit identifiers with the blockchain-based system, which has been operational since the end of 2017. Much of the World Economic Forum's efforts in the crypto space have centered around facilitating communications among central banks, Landquist added. Many of these institutions have been quietly researching the space for 3 or 4 years, with a surge in 2016. Very interesting, because that's when the second cryptonomics cycle began, and they got in it and were experimenting it before 2017, when we went into the optimism to euphoria stage and things got really out of hand. I wonder who was buying that digital currency. Maybe the insiders who work for the banks? Smart money gets in before the retail money. And that's what we saw. And the banks have been involved since 2016. But you wouldn't know that. This is how the banks always hide things from you. Just a reminder here for one of our diversification strategies is that the banks have been buying gold out the wazoo. You can see from this article, central bank gold buying hits highest level in half a century. That means highest level in over 50 years. They've been buying gold. But did you know they were buying gold? Because according to the Basel III documentation, gold is now a tier 1 asset. So banks that hold gold can count it 100% towards their books, not just 50% towards their books. And it's now a tier 1 asset. They hide things from you. They don't want you to do what they do. They want you to do what they say. And we see that in practice in what's going on right now, not only in gold, but also in digital currencies. They conclude that DLT, or distributed ledger technology, just a rebranding of blockchain technology, another way to say the same thing. DLT payment systems would support the economy and support them finally related to retail central bank digital currencies. Many countries have quite segmented payment systems, and having a unified, even if domestic or better cross-border remittance system could decrease the cost of digital payments. Central bank digital currencies that are digitized form of fiat may also be easier for residents to use, which would aid the central banks issuing currencies. They could be able to send payments cross-border in their fiat currency rather than the dollar more easily. interesting, because if we see some of that demand taken away from the dollar, then surely the purchasing power, the value of the dollar is going to take a hit. That's something to keep in mind as we watch this system emerge, with their end goal really of replacing the dollar as the global reserve currency with a new digital currency, Bitcoin, as we see everything being built around Bitcoin and for Bitcoin. Well, in the next article, we can see how fast things are really starting to move here and how the pace is being picked up, not only through research of the central banks, but also through governing bodies like the Securities and Exchange Commission. In this article, we see that the SEC just released its long-awaited crypto token guidance. The U.S. Securities and Exchange Commission has published fresh regulatory guidance for token issuers, nearly half a year in the making. The guidance focuses on tokens and outlines how and when these cryptocurrencies may fall under a securities classification according to the document. The framework itself outlines a number of factors that token issuers must consider before evaluating whether or not their offering qualify as securities. These factors include an expectation of profit, whether a single or at least central group of entities are responsible for specific tasks within the network, and whether a group is creating or supporting a market for a digital asset. The criteria for this reevaluation include whether the distributed ledger network and digital asset are fully developed and operational, meaning individuals can immediately use the token for some function. The token is focused on a specific use case rather than speculation. Prospects for appreciation in the token's value are limited, and if billed as a currency, the token actually operates as a store of value. While this guidance has been a long time coming and provides some legal clarity for token issuers, it is not a legally binding document and should be seen more as guidelines. So yes, we don't have laws yet, but these are guidelines, long-awaited guidelines that we've been waiting to see. And this is definitely bullish news. This is news that the market is moving forward. The SEC isn't sweeping this stuff under the rug. It's what we've always been saying. An ETF will come. It's just going to take time. Guidelines will come. It's just going to take time. Laws and regulations will come, but first come the guidelines, and it just takes time. But fortunately, those things just happen to be timed up with the cryptonomics cycle. So as we go into the next cycle, all these things are going to be coming to fruition, and it's going to lead to even more of a valuation explosion and market cap explosion because of how much progress was made through the bear market because of the amount of time moving from one cycle to the next. These are how markets work, and as much as we want to see Bitcoin blast up through $100,000 tomorrow, it just doesn't work that way. You have to be patient. You have to maintain our mindset and our strategy, which is a long-term mindset and a dollar cost accumulation strategy. If you do that, then moving to the next cycle, it's going to be a roller coaster ride for you, and a fun one at that. Moving on in the article, we see that they still have some remaining questions, that is the SEC, and they say, while the guidance discusses security classifications, other questions remain unanswered. In particular, the SEC has yet to provide clarity around the idea of custody for broker-dealers holding cryptocurrencies. So their one concern was manipulation, which we've seen that regulated markets are helping with that, and the arbitrage opportunities are shrinking because of the legitimacy of the regulated markets. And now the remaining issue is crypto custody. Well, we're going to take a look right here at Bakkt. Bakkt, of course, is building an open, seamless global network to enable you to buy, sell, store, and spend digital assets simply, safely, and efficiently. And not just for everyday users, but for institutional investors as well. And we see that Bakkt is going to make things more efficient. You buy, sell, store, and spend digital assets with an efficient global system. It's going to make it seamless. It's an integrated global platform for trading, warehousing, and commerce. And that's the key right there. Warehousing. They're going to be their own clearinghouse, and they're going to conform to the regulatory and custodial laws and guidelines that we see come out over the next year, year and a half. Bakkt is going to be one of those people to do it, and it's going to make it secure. Leveraging Intercontinental Exchange's market infrastructure, Bakkt is designed to bring regulated trading, clearing, and warehousing. This is going to take care of the other concern that we see from the SEC which of course is the idea of custody for broker dealers. Bakkt is going to answer that call, and Bakkt is not the only person who's trying to answer that call. We see in our next article, BC Group unveils insured custody offering for Asia-based crypto investors. Hong Kong trading and asset management firm Branding China Group, or BC Group, is launching an insured custody service for cryptocurrency. The company confirmed in a press release shared on April 1st. BC Group, which owns a portfolio of various blockchain companies, including cryptocurrency trading platform and digital asset brokerage, said it decided to build the service to respond to the needs of institutional investors in Asia. Please catch that part. To respond to the needs of everyday citizens? No. We're not talking about retail money. We're talking about the needs of institutional investors in Asia. Its release, it says, constitutes the first such insured custody solution for crypto assets available locally, but will use United Kingdom-based insurers. BC Group's custody service removes one of the key barriers that has to date prevented professional traders and institutions from adding digital assets to their portfolios. The firm's chief technology officer, Hugh Madding, commented in a press release, and he added, "These traders can only transact on exchanges that aligned with strict regulatory and fiduciary guidelines and meet high compliance and security standards. Insured custody is a vital component in meeting these standards." Well, that makes perfect sense, doesn't it? That's probably why it's another major concern of the SEC, because insured custody is a vital component in meeting the standards and guidelines that are out there to protect institutional and retail investors. BC will capitalize on the burgeoning institutional investor market, which is set for greater expansion worldwide in 2019. Yep, that's right. Institutions getting ready to expand just before the next cryptonomic cycle, getting in at the bottom of the bear market, getting the best of the best when it comes to price points, and being prepared for the explosion forward of this market as the guidelines, the laws, the regulations, the custodial guidelines are all being set in place. Not being put into law quite yet, but being set in place so that these companies are ready to move forward and feel comfortable that they're within the guidelines of these regulatory bodies that will eventually write the laws that they're going to have to conform to. And this is not just happening on an institutional level or a custodianship level. We see this happening also with exchanges. In our next article, we'll see it. A study shows that 14% of major crypto exchanges are licensed by regulators. Well, wait a second. I thought this was the wild, wild west. I thought it was dangerous to get into cryptocurrency. That, having the banks told us you don't want to get in cryptocurrency, it's probably going to go to zero. It's a very speculative, risky asset. And if you have to work with sketchy exchanges and you could lose all your money, well, this study shows that 14% of major crypto exchanges are licensed by the regulators. Only 14% of 216 global crypto exchanges were confirmed as being licensed by regulators. Regulatory technology startup CoinFirm found in its crypto exchange risk reported, released on March 27. Well, that statement's kind of made in a derogatory way, right? Only 14% of 216 global exchanges. Well, we shared on CIA News not that long ago about the wash trading issue that we found, and that only the top 10 exchanges that were all regulated are really host to the legitimate trading of cryptocurrency, while the majority of other cryptocurrency exchanges are wash trading in order to attract coins and make money through listing fees. So only 14% of 216 global crypto exchanges being licensed by regulators, that's not derogatory. You can't say that in a derogatory way. Not where this crypto market is coming from, where just a couple years ago, only one or two crypto exchanges were trying to conform to these regulatory guidelines. Now we see 14% of them are confirmed as being licensed by regulators. That's right, confirmed. So this market is moving forward with guidelines, regulations. Crypto exchanges, especially the legitimate ones, are now starting to form, and they want to be confirmed and be licensed by these regulators, because they know when this gets big, if they're not taking the proper steps now to follow the guidelines or follow the laws or to be regulated and to comply with KYC and AML laws, then they're going to have serious issues when this thing pops off during the next cryptonomics cycle. The major focus to take away from this article is that not only do we see custodial solutions being made by Bakkt, and not only do we see other companies like BC Group answering that call for institutional investors located in the Asian region, we also see that crypto exchanges, 14% of them specifically, are already licensed by regulators. So this is a positive sign moving forward about how this market is one step at a time. We're not going from 0 to 100, but one step at a time, one small step at a time. We're conforming, we're getting licenses, we're following guidelines. It's a slow grinding process. Nobody becomes a millionaire overnight, right? But as this process goes through, remember, let's keep the mindset, let's keep the strategy, and let's use this as the fuel to our fire, knowing that this market is moving forward and that the bankers are lying to you when they say cryptos are going to zero, because we can see the market through the news getting ready to explode. And in our next article, we'll see it even more. Chinese regulator approves first 197 blockchain firms, including Tencent, Alibaba, and Baidu. Well, that's really saying something, because in China, you can't do anything without their approval. And here we see they approved their first 197 blockchain firms. China's Cyberspace Administration has released the first list, it's 197 companies long, of registered blockchain service providers. Chinese initiatives by internet giants such as Baidu Blockchain Engine, Alibaba Cloud Blockchain as a Service, Tencent Blockchain as a Service, and the Blockchain as a Service platform owned by e-commerce giant JD.com appear on the list. Financial institutions such as the China's Zhengsheng Bank and Ping An Insurance Company are also included. And we see it in Japan as well. Japan, Yahoo-backed cryptocurrency exchange set for May launch. Yahoo is one of the biggest companies in the world, right behind Google. Most people search Google, but a lot of people use Yahoo. So for Yahoo to be getting in the cryptocurrency exchange business, that means that this market must be pretty well established and being ready to move forward. Here we see Japanese cryptocurrency exchange Tatao will start trading a limited range of cryptocurrencies in May of this year. That's this summer. Tatao, which is 40% owned by a subsidiary of Yahoo Japan, will initially trade Bitcoin and Ethereum, with margin positions available in 3 additional cryptocurrencies: Litecoin, Bitcoin Cash, and Ripple. The move marks the internet giant's first foray into the cryptocurrency exchange world, with Tatao having gained regulatory approval to launch on the Japanese market. So we got regulatory approval for the Yahoo-backed cryptocurrency exchange in the Japanese market. So there you go. It's all over the world where these regulatory approvals are starting to come out. These licensing process is starting to come out. The guidelines are starting to come out. And in our last article, we're going to talk about something extremely important and quite exciting. We see here that connecting the dots, blockchain-based voting for 2020 US election. Now, where have we heard that before? Not too long ago, I was having a conversation with somebody, and they asked me, if you had 5 minutes with President Trump, what would you talk about? What I said was, I would say, Mr. President Trump, thank you for everything that you're doing, but there's a couple of things I want to bring to your attention. First off, and I know you already know this because you come out and you speak against the Federal Reserve, and you say what they're doing is wrong and that their policies are manipulative, and that they need to be audited and other things like that. You haven't quite done that yet, but you know that that needs to be done. That is the number one problem in our country. Our government doesn't have control of our currency. However, with that being said, I'd like to bring to your attention, Mr. President, we can use blockchain technology to solve the second biggest problem in the United States of America. We can solve voter fraud with blockchain technology. And I guess at this point I'd have to add, just like the Russians are doing. Because what we know for a fact, which is provable by documented evidence, is that dead people are voting, illegal aliens are voting, some of these people are voting 2, 3, even 4 times. And this has all been documented. This is not a conspiracy theory. This may be happening. There's documents that show that this is happening. And what that does is, just like when someone makes counterfeit money, it devalues the existing money in the system, or when the Federal Reserve prints more money and increases the supply, it devalues the existing supply. That's applicable to voting as well. When an illegal comes and votes, or a person tries to vote for a dead person, or a person votes 2, 3, even 4 times, that devalues the value of my vote and of your vote and of everybody else who cast a legitimate vote. The voting system in the United States is broken, and we're supposed to be the republic. We're supposed to be the shining example of freedom and democracy to the world, and our voting system is broken. Mr. President, please look at using blockchain to upgrade our voting system, to empower our people, and to guarantee that our vote actually counts. In the article we see, the past week EOS Telegram channels have been filled with countless clues from Dan Larimer and Brendan Bloomer about the coming releases of Block 1. Dan said, "I enjoy leaving hint messages that are only obvious in hindsight." He says, "I think it's quite clear that Block 1's big announcement isn't going to be their crypto wallet or Mios. Yes, they will obviously come out with a wallet, but I don't think it will only be a wallet. Also, I don't think their social platform will be the big announcement. It will be one of the few surprises. There are a few, but not the big one." Dan even confirmed the wallet code would already be released prior to June, which is when these big announcements are going to come. He said, if June 1st only produce a wallet code being released prior to June. And we'll go through a couple more messages to see the hints that Dan, who is the creator of multiple blockchains, including Digibyte, Steam, and EOS, that what he's been leaving as hints, there are a few. Replying to, "Some of these surprises are obvious for people following closely enough. I'm looking forward to the double top secret surprises that I have zero awareness of. It's obviously not a secret that we are reimagining Steam." So that would be hard to say that that's the big surprise. Yeah, but Apple has their new payment, and our wallet has nothing to do with payments. So he's shooting down people's theories here. And the author says it becomes more and more clear the wallet or Mio software is not the big announcement. Something else is, but what? More and more small hints were dripping in slowly through the past couple days. Trump's advisors know about Block 1. Everyone in Washington, D.C. wants to talk with us. Someone said, so Cardano will be late to the party. Late to party? The party will be over. If thousands try to airdrop, it's up to the community. Interesting. And then finally, Zach from Everything EOS put the pieces together. That is almost Brandon and his team moving to Washington, D.C., Mick Mulvaney being a blockchain enthusiast, but one piece of the puzzle is still missing, Block 1's product. Here's the quote, "And I know you're getting ready to come to Washington. Washington will be better to having you and your organization here. Blockchain technology has the potential to revolutionize the financial services industry, the U.S. economy, and the delivery of government services, and I am proud to be involved with this initiative." What an interesting quote, talking about blockchain applying to government. And here's a couple more clues. In January 2019, the Italian government passed a new bill regarding validation of legal documents using blockchain. A favorable use case for blockchain is its application in online voting. The M5S party is currently looking for researchers able to prove the efficacy of blockchain for voting. From this moment on, I suspect that Block 1 might be developing something in this direction, as well as with my eyes and ears were open regarding the project based on blockchain voting. After looking around for some more online blockchain projects that including online voting, I found the website of a company called Follow My Vote, founded by Adam Caleb Ernst and Nathan Hort on the 4th of July 2012. The company is based in Blacksburg, Virginia. Then I find that they own a pending patent. And last but not least, one of the 3 owners of this patent, Mr. Byte Master himself, Dan Larimer. Interesting. So Dan owns a part of this company that's working towards blockchain voting. He's one of the owners of the patent, and we can see the patent, blockchain electronic voting system and method. And here's Brendan Bloomer, CEO of Block 1. Anti-governmental rhetoric is not collaborative and not productive form of impractical idealism. Let's make change. Most existing blockchain projects are not seizing the opportunities in front of them because they're focused on resisting government opposed to improving it. This is starting to change and will be the catalyst of a global rebuild of our digital infrastructure. Daniel says those envisioned in secured voting, and then links the patent that we just talked about. And one more thing here, can we see USA 2020 election vote on blockchain EOS? And Dan says, I hope at least a parallel election is carried out on EOS, so we might not see blockchain being applied 100% to the 2020 election, but perhaps a test net, a parallel election on the EOS network could take place as they try to work out some of the kinks or bugs, if there are any. And then we can see how this technology can be applied to different things in government to make it more reliable, more structured, more accountable, and know as U.S. citizens or citizens of whatever country you're part of that your vote is counted and that your vote is protected by the blockchain, and that some crazy lady down in Miami can't be hiding your vote or throwing away your vote because it's all based on human error. We have the blockchain and the code protect your vote and ensure that your vote counts. This is huge for EOS, which not a lot of people know what it stands for, but we jokingly say here at CIA, it is the Earth Operating System. So it's very exciting to see the market move forward this fast. We see the banks coming out and doing what they've always been doing, which is lying to us about cryptocurrencies and their potential. And we see 44 central banks experimenting with digital currencies and lying to us, just like they're lying to us about gold and how it's a tier 1 asset and a great hedge against the dollar and the crash of the market. And we see that the SEC just came out with long-awaited crypto token guidance, showing that they're not sweeping things under the rug, but moving forward with this industry. And of course that they're not the only ones who are moving forward with the industry, and they share concerns about custodianship, and Bakkt is answering that custodianship issue not only on a retail level but on an institutional level. And not only Bakkt but also BC Group getting involved with, remember, the needs of institutional investors in Asia. We're getting to the institutional phase now. We're out of the early money, out of the smart money, and we're moving into the institutional phase, which is why the regulations and guidelines and everything's coming to light. And you say, well, what are you talking about? I thought this was the wild, wild west. No, it's not. We see that 14% of major crypto exchanges are licensed by regulators, and that's backed up by the report that we shared a couple days ago about how the top 10 exchanges, there's no arbitrage opportunity because the trading is actually that tight and that well maintained. And it's not only happening over there, but it's happening in China when they approve their first 197 blockchain firms. It's happening in Japan with Japan Yahoo getting involved in the cryptocurrency game. They have regulatory approval in the Japanese market. And now we see the potential of blockchain being applied, like we had mentioned before, to different parts of government to optimize, to make the process more efficient, to guarantee that your vote counts, to eliminate human error, and to build trust in the trustless system that will eventually be used to manage everything. Machines will run the world, and that's the system that they're building, the future financial control system. And we're here to watch it emerge, to get you prepared, and to make sure that you have the right mindset, the right strategy, so that for what the world intends to use for evil, that God, if he wills, can use for good and can bless his people with the wisdom, knowledge, discernment, and understanding that's needed to navigate the emergence of the new financial system of the future economy. Well, that's it for CIA News. Thank you for joining us, and thank you for your support.